Happy trading New Year, by the way. Not so happy for the markets. Get another check. I'm sorry to tell you. Don't come at the messenger. Stocks kicked off the year kind of like they left last year, which is in the red. The NASDAQ down almost 1%, was off 0.7%. The Dow only down 10 points, so we'll call that a win. The Dow tried to stage a late-day comeback, but in the end could not and still closed in the red. By the way, Meta Platforms, formerly known as
Facebook.
Thank you. Among today's few winners. That's right. Meta was up 3.6%, coming off its worst ever year since going public a decade ago. Chinese internet stocks, they continue to run. The KWEB rallying more than 5%, with names like Bilibili and Pinduoduo seeing outsized gains.
You just wanted to say that, didn't you?
Yeah,
that's it.
Yeah, and you said it kind of
I wanted to see if I could.
Yeah.
I'm not sure I got it off, but I tried. Anyway, on the downside, there's a company called Tesla. They make cars, and that stock fell another 12% today. They did not sell as many cars as people had hoped them to, missed delivery numbers. The electric automaker just over 405,000 cars last quarter compared to expectations for more than 430,000. Stock having its biggest drop since September of 2020 and its lowest close since August of that year. For more on the road ahead for Tesla is Wall Street Journal tech reporter and CNBC contributor Tim Higgins. Tim, we could point to China. We could point to recession fears. We even point to what some may say is Elon Musk's reputational damage. Is there any way that there's one thing or rank the things that are the most wrong with Tesla right now?
Well, today is probably more about the expectation game. Remember, it was Elon last year talking about he thought sales could increase by 60% at one point. Then it was 50%. And then just a few months ago, it was going to be just under that 50%. And when it comes in at 40%, that's a number way lower than a lot of people are thinking for this period.
You know, there's also just the matter of competition, Tim, is there not? I mean, a few years ago, yeah, you could order a Rivian, or maybe there was like one GM Volt or Bolt or whatever they called it back then. Now everybody's got electric cars, and I'm reading Car and Driver, and I'm reading you, and I'm reading Dan O'Neill, and I'm reading Road and Track, and there's a lot of electric cars getting a lot of love for the critics that are not called Teslas.
Yeah, absolutely. And this year is going to be even more difficult as those tax breaks are going to be hitting in the U.S., being encouraging for people to look at an EV, to try an EV. And unfortunately for Tesla, they're not as robust for the Tesla offering as some were hoping for because of the pricing for those vehicles and the way that they were judged to be in the categories that they are. So investors are disappointed at those new numbers that we're seeing as they face that more competition. Now their vehicles might be too pricey for some.
We talked about China, the quote reopening. I hate that term, but you know, China's a massive market for Tesla. Tim, if China quote reopens, are we going to see Tesla's fortunes turn around, at least not a stock perspective maybe, but a car perspective?
A hot market in China is good for Tesla. Tesla can benefit greatly from that. It has benefited greatly in the past few years from China. There's enthusiasm for the brand over there. So yes, a reopening of China is positive for Tesla going forward. It also helps with its production. If they could get past some of these COVID concerns and help smooth out things, those are all up signs for Tesla and Elon.
Hey, Tim, part of the pain in the stock, I think, is a lack of trust in the company. And you look at those delivery numbers. I'm curious your thought on, and there's some speculation out there, you know, that of the 411, only 300 of that were new orders. And the problem is we don't have the data, or we don't have the transparency in this company to even understand what is what.
Coming at the end of the month here, I think there'll be, when we can get some of the regulatory filings, I think people will be looking at that. But you're hitting kind of, that's one of the issues that we've seen with Tesla the last few months, is just concern about the communication to the market. We've heard from investors unhappy with Elon as he's been distracted at Twitter, wondering what he's going to be doing with Tesla. How are they responding to this possible recession? And yeah, this is an issue with communication and trust in where the company is at this point, which is, I think, why you're seeing Tesla kind of signal they're going to do an investor day in early March, try to clear some things up.
Tim Higgins of the Wall Street Journal. Thank you very much, Tim Seymour. Everybody, let's talk about this. I mean, what do you think is the biggest problem with the stock, Tim Seymour? Reputational issues.
First of all, I have to laugh that we're talking about car company issues. We're not talking about this tech company and this mumbo jumbo that was, I quote my friend Cy Jacobs, who said, being wrong, Tesla is so 2020. It's a mark-to-market issue. I mean, if you think about it, I was 3 years early and wrong, so I was very wrong. But my problem was this is a car company. We need to value it like a car company, and the competitive landscape, but also the accounting. They solved the balance sheet issue 3 years ago. I don't think they've solved profitability, and they certainly haven't solved the multiple.
I think that's the biggest thing, valuation. People keep comparing it to this peak number where the stock traded, which was so absurd. It sort of, wasn't bound by any gravitational pull of finance. Like, it didn't matter. They were going to just grow forever and be able to have tremendous margins, and competition would never matter. And that's so that it's here. It's still
competition.
Well, to that point, it's still a $340 billion market cap company, down 75% from those all-time highs late last year. And I would just say China is obviously the issue today. And here's the thing. We've talked about this on the desk for months and months now. China, we just spent a lot of time talking about China. They have less than 10% market share in EVs in China. There's lots of competitive, like local competitors in China that might have a leg up. And if you want to go,
some are coming here, by the way.
And I'm going to hand the baton to Guy. If there's any geopolitical issues, the stuff with China is only heating up. And for some reason, Elon has been really quiet about all these conspiracies. He loves tweeting about conspiracies, lab leak, zero COVID, all this sort of stuff. He doesn't talk about those. Free speech. Doesn't talk about those because China is really important to them. It's not that big of a market. It's declining.
In terms of metrics, quickly, Tesla's still trading close to 2 times revenue. Understanding there's a technology aspect. Ford, for example, trades at about 38% of their revenue. So something's got to give. Ford should be higher, but Tesla can still go a lot lower, in my opinion.
Can still go low.
Yes, sir.
69 price target right there.
$69.